What is the appropriate fiscal response at the moment, given what you know, what's in front of you?
Well, the economies are pretty close to full employment, so we don't need to inject demand. What we need to do is reinvigorate supply. We've got this ironic situation of all this technology and the slowest productivity growth on a sustained basis over the last 10 years that we've had in decades. It's lower than half the long-run growth rates of productivity. So we need things to encourage capital spending and to encourage capital spending in the U.S. And there's too much in the U.S. tax code that encourages people to do their capital spending and their earnings overseas with the way the whole corporate tax code is set up. So that, to me, is the fiscal response. We need to reinvigorate the supply side. And I think we need to start thinking about some labor market reforms and retraining, because monetary policy can't tackle the issues where there are really hurting pockets of unemployment in the Midwest, away from the coast.
We're going to bring in Andrew Slimmon of Morgan Stanley Investment Management right now on the telephone. So, Andrew, you've been listening to this. Is there a danger at some point if we inject $2 trillion in tax cuts into this economy right now, particularly given the fact that we're close to full employment, that we may actually overheat the economy and cause the Fed, as a result, to really hike rates more quickly?
Absolutely. That's the number one risk. You've nailed it, is that in many ways we may get to full growth rate faster. That means the Fed moves more aggressively. You get an inverted yield curve and you get a recession out a couple of years, and the market starts to discount that in advance. I think that is absolutely a risk. I hear people always talk about too much weakness. I think it's too much strength. That's the risk to the equity market.
Andrew, are there ways to direct those tax cuts which would actually generate more legitimate growth rather than simply inflation?
Well, yeah. I mean, I certainly think that what you've been discussing is dead on, which is it is about capital investment. I think that's the key thing, is for tax cuts to induce capital investments.